This week, we're featuring two legendary value investors whose long-term records are still the best in the business. One says he is very cautious. The other is downright cheery. We'll get to him in a moment. First, the wary one. He is Jean-Marie Eveillard, the longtime lead manager of the First Eagle Funds. Jean-Marie has received a Lifetime Achievement Award from Morningstar for delivering one of the most successful long-term records in the investment business. In a recent interview, I asked him if he thought we were in a major inflection point in global economic and financial history, and does this mean a major change in investment strategy?
That's right, and I believe in two ways. Number one, the big, long credit boom. Towards the end, over the past 5 or 10 years, you could say the American economy was doing well because, like some of the baseball players, the economy was on steroids. And once you're deprived of your steroids, then a price has to be paid by the economy.
Right.
The second, maybe the best that we can hope for, at least over the next few years, is a little bit of what happened in Japan. In other words, maybe it's slightly better, maybe 1 to 2% economic growth every year.
You're talking about real growth.
That's right.
Right.
And the second thing is, China and India are truly, and Asia outside Japan at large, that's the future.
And why is that the future? What is it about Asia that you think is so dynamic?
Because China and India were asleep for a long period of time, and they woke up. China first, then China in the late 70s, India at the beginning of the 90s. And the potential is absolutely mind-boggling, and they seem to follow, at least half-decent policies. China is certainly no longer a communist country, and India is certainly no longer a socialist country. So those are the two countries that are emerging as major economic forces. And one has to suspect that over the next 10 to 15 years, those two countries, from an economic standpoint, will do better than the American, the European, and the Japanese economies.
As individual investors, we should probably,
right.
we want to be invested where the growth is, right?
We feel that historically we've paid relatively little attention to emerging countries, emerging markets. We noticed that at the beginning of this year, Marty Whitman at Third Avenue Funds, and he's a well-known and respected value investor, opened a small office in Singapore. I think Marty and I and a few other value investors believe that Asia outside Japan is the future. We're going to spend a lot more time and a lot more effort looking at securities in those countries.
Our next guest is none other than Marty Whitman, the cheery value manager I mentioned earlier. Whitman is the celebrated portfolio manager of the Third Avenue Fund and one of the deans of value investing, buying stocks at what he considers deep discounts to their takeover value. While 2008 has not been a good year for him either, his long-term record is among the best. Whitman's career spans more than half a century. He started as a security analyst at Shearson Hamel in 1950. For the next 20 years, he held positions as Director of Research and Corporate Finance at several firms, and he entered the asset management business in 1984. In a recent interview, I asked Whitman to describe his approach to analyzing a company and deciding what securities he is going to buy.
I would say I put it down to 3 factors. We're not going to buy a common stock unless the company has a super strong financial position, which is pretty easy to measure by an absence of liabilities on the balance sheet or off the balance sheet, the presence of very high quality assets, and or the existence of cash flow from operations. 2, we understand that in any dealings with managements, there are communities of interest and conflicts of interest between managements and outside stockholders. We try hard to restrict our investments to managements who see the communities of interest as more important than the conflicts of interest.
Now, you believe that this is a time, that in this kind of financial crisis that we've had, that this is a time for investors to get very rich. These are the years that you wait for, right?
Once in a lifetime.
Do you feel like this is like a once in a lifetime?
Yeah. I bet it hadn't happened since the 30s that you could get this kind of pricing in companies that meet the criteria that I talked about, plus, the strong financial position, reasonable management, full disclosure, plus that's in our common stock investments. I think we're going into companies that are going to grow the NAV 10 to 20% a year compounded in the years ahead. I mean, such as our biggest single representation is companies that have a huge presence in mainland China.
Your advice to individual investors in this kind of an environment, which is very scary for a lot of individual investors. I mean, what do you tell people when they ask you? What's your advice?
Don't borrow money. Be long term. Buy and hold. Or if you will, read the book about John Templeton. He sounds, I did a blurb for him. He sounds just like I do.
Not a bad way to sound, Marty.